A few weeks ago, I made a video on how the Chicago area is experiencing two vastly different real estate markets. You have the really competitive, fast-moving suburbs and the much slower and slightly declining city. Well, there's another submarket here in the area that's also struggling, and that's the high-end luxury real estate market. So in this video, we're gonna go over how the luxury real estate market here in the Chicagoland area performed in the first 6 months of the year, what's causing some of the shifts, and of course, what we can expect moving forward. Hi, my name is Peter and I'm a realtor here in the Chicagoland area. If you're thinking about moving here or if you're thinking about leaving, feel free to get in touch. I'd be more than happy to help out in any way that I can. All my contact information is down below. I'm sure that my team and I can assist you. Okay, so the definition of high-end luxury real estate really depends on what market you're in because it varies across the board. But in Chicago, the high-end luxury price point is anything that's $4 million or more. And in the first 6 months of 2023, only 36 properties above $4 million were sold. And that's down 51% from 2022, which had experienced 73 sales of such properties. Now, it's true that 2022 was a record year for high-end luxury sales, but 2023's numbers are also lower than 2021, which had experienced 41 sales at $4 million or more during the same time frame. Now, it's true that sales are down across the board in most markets in the country. However, sales here are only down about 25% year over year, which is significantly less than the 51% in the luxury real estate market. And not only are total sales significantly lower, but prices are as well. We're seeing a lot more price cuts in these high-end properties, and the median home sale price of them has also declined year over year. So the question now becomes, well, why is this happening? Why is the luxury real estate market here in Chicago specifically taking such a hit this year? Well, the first reason that comes to mind, and you probably guessed it yourself, are the higher mortgage interest rates. When the rates were low, people were able to afford a lot more house than they were used to. So they capitalized on that by going out and buying properties. Sellers also saw that properties were going at an all-time high because demand was really high. So they were a lot more inclined to go ahead and list their houses, and typically at pretty high price points. But now that mortgage interest rates have more than doubled, affordability has taken a hit, and the market definitely slowed down. Now, there's a lot of people that'll argue that mortgage interest rates don't actually have a big impact on the luxury real estate market. And while that's true to some extent, I believe that interest rates do have an impact. However, it is more indirect than direct. And that's because interest rates also impact other things, such as the stock market and business revenue. And if you think about it, most high net worth people who are buying these luxury real estate homes, they're heavily invested in the stock market, and many of them probably own their own businesses. So when portfolios are down and businesses aren't producing as much revenue, you're gonna have less money going around for these high-end properties. Outside of interest rates, another reason for the slower luxury market is because a lot of companies have shifted their headquarters and moved them entirely out of the Chicagoland area. And in many of those cases, a lot of high-paying executive roles also left with them. Thus, you have less demand for people that are looking for luxury homes. Citadel is a fantastic example of this because when Ken Griffin announced that he'd be moving his headquarters from downtown Chicago to Miami, a lot of executive positions went with him, and thus a lot of high-end real estate hit the market. This included Ken Griffin's portfolio, which includes 4 high-end luxury condos in Chicago's Gold Coast. The issue is that he's asking for a whole lot less than the $58 million that he paid for them in 2018. So barring any major economic disruptions, chances are that the second half of 2023 for the high-end luxury real estate market here in Chicago will largely remain the same. It's not gonna be what 2022 or even 2021 were, and it's gonna be a lot closer to what pre-pandemic numbers look like for this submarket. Of course, if interest rates come down, it would revitalize that market once again, as well as all markets across the country. However, I think another big factor to consider is that a lot more businesses need to be moving in to Chicago. They need to be creating and offering high-paying jobs so that people will have more confidence in the city and be more willing to spend a lot of money for housing here. So there you have it. There's a quick insight into what's been going on in the luxury market here in Chicago for this year. If you want more information on the Chicago market, as well as Chicago in general, feel free to stick around on this channel where I've got a lot of content on that topic. Thanks so much for watching, and I'll catch you on the next video.